So we overextended the market maker's expected move into the early part of the day. Fell back down, didn't fill the downside gap, but started to a little bit. 63.05 end of day. Still above the 6,300 support going into Powell's speech tomorrow morning. So, probably still moderately stable. Although I will say that the Fitch information today was not the most bullish. This looks like it's starting to form a bit of a head and shoulders after today's breakout and failure, although the right shoulder still needs to form here. A loss of the prior week close being probably the confirm level for rejection, off of the new 63.74 high, which is about $4 higher than I'd projected. Um, Dollar falling again today, but yields at the top end of the curve also following. A lot of this following the speech into the weekend from, fuck, I can't remember which Fed president, but he wants to do a, was it Waller? He wants to like do a rate cut at the July meeting. And then he wants, if he doesn't, if they don't vote for a rate cut, he's gonna abstain or whatever to make his little political statement to try to get J-Pow's job. Um, Correlation breaking down interestingly across almost the entirety of the trading session, with 1 and 3 month correlation both ending the day a little bit higher. Commodities kind of flat here, but there were big moves up in precious metals despite the drop in agriculturals and oil. Um, so precious metals starting to move up with the falling dollar again, which is interesting, especially as gold breaches back above 3,400. Silver is also still fairly high, around 38. 3 month correlation rising, but we're not seeing an uptick in bond volatility yet. I don't think today's drop was sufficient to drive that. We see leverage breaking down on the top end of the carry trade, but staying levered up on the short end. And as that top end leverage breaks down, we're starting to see forward yield on volatility climb alongside the rise in the bond curve. Skew, this is end of last week, but it had ticked down slightly, not much. Still not a lot of out of the money put demand. Breadth, interesting, like falling into the end of last week, probably fairly flat today. It looks like possibly some of the might have widened a little bit with like small and mid caps selling off a tiny amount. Um, VIX and VIX 3 month still both, or VX and VIX 3 month both down on the day. There was definitely some further dated volatility shorting going on, probably with the drop in, or soon to be realized drop in like 90-day historic vol, which is going to be the next like probably driver of vol control into markets. But VIX up 1.59%, so 30-day volatility up, longer dated volatility down, which was indicated by the spread that we saw last night in HVIV, right, where it was the short dated vol selling was disincentivized and the longer dated vol selling was incentivized. And I think we're seeing the effects of that pretty clearly today. Um, as far as Fed fund futures go, I mean the mid 2026 is up, but like Jan 2026 is still below 2, and not much of a change in the September. So, despite the rest of the market pricing in some more rate cuts, it doesn't seem like fund futures are agreeing with the assumption that is driving down the long end, and so I think there's probably a very good chance if this continues to drive down into the FOMC meeting, that we could see the long end shoot back up post FOMC. Um, Bear steepener down, but still holding above 50. Out here, we have a breakout above the like kind of ascending trend, which is starting to turn into like a little bit of an ascending wedge. That rejected off of the intraday high, which is also an all-time high for SPX, but still no confirmed failure there. I probably want to see a loss of 62.90 to mark a rejection, but then there's quite a long way down to the bottom of this trend, and back to that 62.01 level, which is, I think, fairly important after it acted as support twice over the last couple of weeks. So I'd probably be watching that. A loss of 62.01, that opens up a breakdown towards the EMA 30, which is right around where the prior all-time high was. And that would be, a filling of that downside gap on the weekly at like 61.73. So, for a pullback, I would still be like targeting somewhere in this range down here, if we were to get one. This would be the ideal time because, buybacks are low, very low. This is like the lowest buyback period over like the next 2 weeks. And we just came off of an OPEX expiration. So, repositioning on the chain, if it's not sufficiently bullish, that opens up an opportunity for things to move down. You get a low test, people reposition, and then they can push up higher post tariff or something like that. But tariffs are 2 weeks out, and so far, no taco. Not even 2 weeks at this point. Like 8 trading days. Anyway, that's what I got. So thank you guys for tuning in. I will see you bright and early tomorrow, hopefully. Yeah. Later.